Marc Ostwald is Chief Economist and Global Strategist at ADM Investor Services International. Hello, Marc. So the context of this, of course, is that there's been less than perfect growth for China in the last quarter. So they're really pushing to up that forecast. Why the focus on domestic spending? What is it about the Chinese consumer that makes them a little reluctant to splash the cash?
Well, I think that's actually not too difficult to identify. What you've seen in terms of the makeup of the labour market is a fairly rapid increase in the so-called gig economy, i.e. workers without a lot of social safety net, and a drop in the formal labour market, and fairly stagnant income growth over the past couple of years, in no small part partly due to involution. There's no doubt that that's contributing, and to trade wars. So that's the big challenge now.
One of the big pushes is AI+, which essentially China wants to see artificial intelligence throughout the economy, basically revolutionizing everything. How is this going to help sort of boost consumer spending, for example?
That I'm not so sure about. It certainly is going to make things more efficient, likely improve profits, and it's definitely going to improve the supply of both goods and of services. But as we've already identified, the real problem is how much of a boost is it going to give to incomes? And on that, I think the jury will have to remain out. What I wouldn't dispute, though, is there's not really any need for additional stimulus, given that government spending in China is actually lower than has been budgeted. So there's quite a lot of extra money available to target some of these projects in the second half of the year.
Services is another really big push in China. The idea is to make this a services-rich economy. Just talk us through the thinking behind that and how that might help grow.
Improving services, China's economy does need to rebalance from the intense investment-led manufacturing sector. There will obviously be a lot more invested going forward in the high-end, high-quality end, and the technologically based things, and indeed in pharmaceuticals. But the silver economy, or i.e. the care for the elderly, and providing an economy which encourages the older members of the population to actually spend more. More efficient and better provision of that. Particularly, there's a target of trying to improve demand in the rural areas of China, above and beyond the urban areas. That will basically be an improvement, particularly if it can be done without high cost. And that's where the application of AI and advanced technologies such as robotics will definitely help.
Yeah, it's a very interesting time. I want to speak to you about China in the world because, of course, the Politburo also spoke about the importance of trade relations, the need to normalize trade relations. But all of this, of course, Marc, against quite a volatile global context. We don't know where tariffs are going. Well, they seem to be worsening at this stage. But also, we don't know the impact the Middle East is going to have on any of us.
Yeah, I mean, the impact of the Middle East on raw materials prices and energy prices is a big unknown. China has a long, good and strong historical record of managing that very, very well, but there's only so far one can go with good management processes when there's so much uncertainty. But on trade, I would say that Chinese external demand is proving to be very robust. And it's proving to be very robust because as much as trade with the US has diminished, trade with other parts of the world continues to increase, not only with Europe, because Europe basically is no longer competitive in a lot of industries and it's easier to actually import from China, but also with regions such as Africa, still strong growth in exports to the Middle East and indeed to South America. And that's really where the real growth area in trade for China is going to be. It's proven to be a very strong trend, particularly over the past year.